Is home ownership a goal for you in 2024? But does the thought of diving into the mortgage process leave you bewildered about even where to begin? Well, fear not. In this video, I will illuminate the path step by step and navigate you in the world of mortgages. Stay to the end, and I promise you will be armed with the knowledge that you need to make that dream home yours. Let's start by assessing your financial health, or getting your financial ducks in a row. It's essential to know where you stand financially before you even look at houses. So here's what you look at. Get a credit check. You can get them online at Equifax or TransUnion. This credit score is basically your report card. It's crucial to know where you stand. Get a copy and scrutinize it for any inaccuracies and get those fixed, such as a credit card that you thought you closed out, but it's still showing up in your credit history. Resolving those types of issues can really improve your credit score. Next up, budgeting. It's time to get real about your finances. You need to show potential lenders that you can comfortably afford the mortgage you're applying for. They'll be looking at your monthly housing costs and your total debt load. So you should be too. A mortgage application requires you to provide details about your living expenses and debts. It may be a real eye-opener for you, so the quicker you can bring your budget in line and start paying down your debt, the more favorable the lenders will see you. It boils down to understanding GDS and TDS ratios. Here's where it gets a bit technical, but stay with me. Your gross debt service ratio, which is the chunk of income that goes towards your housing costs, should be ideally below 39%. And your total debt service ratio, that's all your debt, shouldn't exceed 44%. These ratios are super important in determining how much you can borrow. Now let's talk about getting pre-approved. It's a game changer in the home buying process. There are plenty of places to seek pre-approval by a lender. You have banks, credit union, mortgage companies, and mortgage brokers. Each have their pros and cons. It's a good idea to ask family and friends for recommendations from their own personal experiences. This can lead you to the right lender and one that's the best fit for you. Next, you'll need to gather required documentation, such as government ID, proof of employment, notice of assessments if you're self-employed, details about your down payment and other financial obligations. They'll also want to know about your employment history and the property you're looking at putting an offer on. This is where lenders will take a deep dive into your finances. They'll figure out the biggest mortgage that you can afford, along with the current interest rate. It's a bit like knowing your spending limit before you go shopping. That's why it's important to know before you start viewing properties, because it sucks if you fall in love with a property that is above what the banks are going to lend you. Once your lender reviews everything and gives you that pre-approved status, they'll issue a letter stating that maximum mortgage amount you qualify for, the terms, any conditions, and the time frame that the pre-approval is valid for, usually 90 to 120 days. Any offer you make on a property will carry a lot more weight if you have that pre-approval. Next is choosing a mortgage. This can be tricky, but it's a crucial step. Let's weigh the options. First, you have fixed rates, and then you have variable rates. This is a classic dilemma. Fixed rates mean your interest rate stays the same throughout the term of your mortgage. It's predictable and stable. On the other hand, variable rates can go up and down based on the financial market. Bit more of a gamble. So do you prefer knowing exactly what your payments will be, or are you okay with a bit of unpredictability for that potential lower rate? If you can't decide between fixed and variable, then hybrid mortgages might be the answer. They offer a mix of both, giving a taste of stability and a chance to benefit from rate fluctuations. You will also have to decide on payment frequency. How often do you want to make payments? Monthly, semi-monthly, bi-weekly? Even there are accelerated options available. So the choice can have a big impact on how much interest you end up paying over time. The more frequent payments can lead to less interest in the long run. And don't forget about property taxes. They're usually included in your mortgage payments, but they can vary greatly depending on where you're buying. And that can really bump up your mortgage payment. There's a few more things to consider in your home buying journey. Now, many banks will determine your eligibility for a mortgage by calculating your ability to repay based on a higher interest rate, usually 2% over the current rate. So if the current fixed rate is 4.5, your income and debt ratio will have to be able to handle a potential mortgage rate of 6.5. This is called the stress test. It's a safeguard that was implemented years ago after so many people lost their homes back in 2008. And it proves that you can handle a financial commitment in tougher conditions. Do you know that there are several government programs that can help home buyers as well? From using RRSPs as down payments or the government loaning you down payments for a home if you're within a certain income bracket, these tools can be incredibly beneficial in boosting your initial investment. It's worth looking into, see what's available, and seeing if you qualify. So you're ready to make an offer. Things are going to get real. Once you decide on a house, your realtor will explain and help you fill out the purchase and sale agreement. This will be presented to the seller, and they will either accept, reject, or make a counter based on any part of the offer. Once both parties agree on terms of the offer, this agreement will be sent to your lender so they can start the final mortgage approval. The lender most often will require the property be appraised to ensure that it's worth the price you have offered. If the appraisal comes in lower, you might need to renegotiate the offer price with the seller or come up with the extra funds yourself between the amount you can mortgage and the amount you offered to the seller. Buyers are often caught off guard with properties with acreage because for residential mortgages, the appraisal will only take into account one outbuilding and approximately 12 acres of land. Offer costs and closing costs are additional expenses you'll need to be prepared for when buying a home. There will be house inspection fees, septic and water test fees as you work through the conditions of your offer. There will also be a deposit due with your offer, which is usually between 3 to 5% of the purchase price, essentially your down payment. And this gets deposited into the seller's brokerage trust accounts and will be applied to the purchase price upon successful close. Closer to the closing day, your lawyer will send you a statement of adjustments for what you are to bring to them for closing costs. These can include their legal fees, title insurance, deed transfer tax, property tax adjustments, oil adjustments, and even the remainder of the down payment that you owe. Closing costs typically range from 1.5 to 4% of the purchase price. Your lender will send mortgage instructions and the funds ahead of time so that they can have everything ready for closing day. Last but not least, it's closing day. You'll do the final walkthrough to make sure everything is as agreed when you put in the offer. You will then give your lawyer the A-OK to release the mortgage funds to the seller's lawyers. Once the seller's lawyer confirms receipt of the funds, the deal is closed and the keys are handed over to you. It's a momentous occasion marking a brand new chapter in your life as a homeowner. And there you have it. By following these steps and taking advantage of available resources and programs, you can approach home ownership in Canada with much more confidence and insight. Thanks for joining me on this journey. Remember, stay informed, stay confident, and let's make your home ownership dreams come true. Until next time, it's been The Real Deal with Dawn.